Hello everyone. The government has announced the CPSE ETF FFO 4, which will open for subscription to retail investors on 20th March and 22nd March. The launch of this ETF in 2014 and the subsequent follow-on fund offers have been received very well by our investors. And now that the fourth FFO is going to be launched, we decided to invite Mr. Vishal Jain, Head ETF, Reliance Nippon Life Asset Management, to explain to us the salient pointers of this FFO to all our viewers. Welcome, Vishal. So please tell us what this ETF is all about.
So this is the CPSE ETF. This ETF was launched way back in the year 2014. And with the help of this ETF, investors can hold the best 11 government stocks that are there, which are Maharatnas, Navratnas and Mini Ratnas. Now through this ETF, what the government is trying to do is to ensure that retail investors get holding of these government stocks at one shot. Now if you look at what has happened over the last 3 to 4 years, because this route has been extremely successful, the government has raised nearly 28,500 crores through one NFO and 3 follow-on offers of this particular CPSE ETF. The first NFO was launched in March 2014 and the issue size was 3,000 crores. Post that, in January 2017, the government had an issue size of 6,000 crores. And because of its success, subsequently it then had an issue of 2,500 crores in March 2017. Now this is the fourth further fund offer. And the last further fund offer happened in November 2018, which was of 17,000 crores, which was the largest NFO that the mutual fund industry saw in its history. The current fund offer is the fourth tranche through which the government is trying to divest, in the underlying, blue chip 11 government companies that are there. The investor response has been overwhelming, and in each of the issues we've seen huge amount of oversubscription coming from investors across the board, right from retail investors to retirement funds to foreign investors, and it's been an overwhelming response. So for example, in the last tranche that happened, which is the FFO 3, which happened in November 2017, the issue size was 17,000 crores and finally we ended up raising 32,000 crores in that issue. So the response has been overwhelming across all the issues since the time we've launched in 2014.
So now I want to ask you a question that's on everybody's mind. Why should one invest in CPSE ETF FFO 4?
So I think there are 4 big reasons why investors should invest in the CPSE ETF. The first is that these are blue chip companies run by the government of India. They all Maharatnas, Navratnas and Mini Ratnas. The second is that these companies are trading at very attractive valuations as compared to other stocks in the market. The third is that the dividend yield of these companies is nearly 4 times that of other stocks in the market. And most important is the fourth point, where the government is giving a 4% discount on these stocks to encourage investors to invest in these blue chip companies.
That's interesting. So you mentioned about the valuations of these companies being very attractive. So could you please tell us a bit more about this?
So valuation is determined by a ratio called as the price to earnings ratio, or popularly called as the PE ratio. Now if you look at the PE ratio of Nifty stocks, the PE ratio of Nifty stocks is nearly 26. While the PE ratio of the CPSE index is only about 8.5 or so. So you're getting it at a discount of nearly 35 to 65% as compared to other stocks in the market.
So I have a question here. What is this dividend yield and why is it important for investors?
So dividend yield is basically the amount of profits that any corporate shares with its investors. Generally, you will find that in public sector companies, they tend to share more profit with their investors as compared to their private sector peers. And therefore, if you see public sector companies, and therefore if you see the CPSE ETF, it has a dividend yield of 5.25% versus 1.25% of the Nifty index. What this basically means is that more profits of the companies are being shared with investors. And in the CPSE ETF, if the ETF receives more dividend, it gets reflected in its NAV. And therefore, investors not only gain from an increase in prices that happen in the underlying shares, but also because of the fact that more profits are being distributed by these companies.
So that makes me interested. So which are the companies that form a part of the CPSE ETF FFO4?
Now, if you look at the top 4 sectors that constitute the CPSE ETF, oil, power, mining, and petrochemical, these are the 4 top sectors in the index, and they contribute nearly 85% of the weightage, of all the stocks in the index. In terms of stocks, the top 4 stocks, first one being ONGC, again, a Maharatna, it has monopoly in oil exploration and production. You have NTPC, which is into coal-based power, again, a monopoly in its own field. You have Indian Oil Corporation, which is into marketing of petroleum products. And you have Coal India, which is a supplier of coal. All these companies, very fundamentally strong and monopolies in their respective industries.
So that's quite impressive. So how has the actual performance of CPSE ETF been since the last FFO?
So if you look at the returns of the CPSE ETF since December 7th, 2018, which was when the last FFO got over, CPSE ETF has given nearly 14% returns as compared to the Nifty, which has given just 3.66% returns.
So now please tell me and our viewers, how does one go about investing in CPSE ETF FFO4?
So there are many ways to invest. The first is you can come on to reliancemutual.com and you can invest online through reliancemutual.com, or if you still want to invest through the physical mode, you can come on to reliancemutual.com, download a form, fill up the form and deposit it in any of Reliance Mutual Fund branches or Carvey branches across India. You could also call up your broker, an NSE or BSE broker, and you could invest through any of the online platforms which are available on NSE and BSE.
And the dates are 20th March, which is the first day, and 22nd March, which is the second day, right?
That's correct. So 20th of March, which is a Wednesday, is the first day. Second day is a public holiday for Holi. And March 22nd, which is a Friday, which is actually the second day and the last day for investors to invest in.
Thank you so much, Vishal, for introducing us to CPSE ETF FFO4 and answering all the queries in great detail. Thank you so much.
Thank you, Megha, for having me on this show. Wishing you and all our investors happy investing.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.